Gold investing. 5 reasons why gold could continue to climb in 2026. After watching this video, you're gonna know my stock option that jumped 4.5 times in 1 month. Welcome to World Traveling Millionaire Stock Investor and Option Trader channel. Where are you watching from? Comment down below. Gold is up 6.82% year to date right now. So compared to stock markets, gold jump is not so much this year because remember gold spike in right here January 5,300. After that it dropped, consolidated a little bit, it jumped a little bit, dropped, jump, then consolidated a little bit. That's very normal. So reason number 5 gold could climb in 2026 is because US national debt is over 39 trillion right now. So as of March 31st, 2026, US public debt basically overtakes the nominal GDP. Nominal GDP is only 31.22 trillion. So right now it's 39 trillion. That's pretty serious. In this video, I'm going to talk about why gold price could go up, and in later videos, I'm going to talk about why gold could go down so that you know all the information possible before you make a decision. So if you want to learn more about gold investing, stock investing, option trading, subscribe to this channel. Let's look at reason number 4. Fed rate cut tailwinds. Fed is going to cut the rate once or twice this year, right? If inflation goes down, of course there's a risk. Why inflation? If inflation doesn't go down, Fed may not cut the rate. They may just pause, or they may even hike the rate. In that case, gold may drop. Gold may not go up. So that's pretty serious. But let's say if everything goes well, oil drops, inflation drops, the Fed gonna cut, it's gonna be, gold could be really bullish in the later part of the 2026. That's pretty good. So that's reason number 4. Reason number 3 is World War III. So usually during the war, gold drop a little bit. It could be a moderately pullback corrections at the beginning of the war, but after the war is going on, then gold climb up steadily. It may not be like spike, but gold climb up steadily because everybody wants to buy gold. They don't want to hold cash. But during the war, the cash is gonna be inflated because the government's gonna print more money to buy supplies, right? To make weapons. That's very normal. That's what happened in World War I, World War II. This could there be a World War III? Nobody knows. Right now we have a few wars happening all over the world right now. Russia, Ukraine, and US, Israel, and Iran. There are so many small wars that we can't even count. So that's how the World War I, World War II started. Just a little bit, then after that it's just spread all over. Nobody knows. There's circumstances are there for the World War III. Hopefully it doesn't happen, but if it happens, then you can take advantage of the situation for your family, right? So this is reason number 3. And how about reason number 2? Reason number 2 is a central bank gold accumulations. Usually when you and I public buy golds for jewelry, it may not be pure gold, right? It's just mixed with copper or other metals. But when central bank buys gold, they buy bullions. The bullions are really pure gold, right? So they buy billions of dollars. Not only that, billions of dollars all over the world. So if you accumulate all the demand, the gold mine are fixed, the supply is fixed, but demand is rising because they want to diversify away from US dollars, right? Because US debt is going up, they are afraid that one day US government may not be able to pay the debt. But remember, it happened before. The last time that US debt over the GDP was in World War II. Because of the war, the US government had to print so much money. At the time, the stock market was up. That was great news because US is a seller of the weapons, right? So many materials. The Europe was buying from US. The stock market performed really well. US also print so much money, and so they have so much debt also. So but now we have US debt over GDP again. So let's see if they are able to reduce the debt or it may keep climbing. So that's why central bank, they are nervous. They want to buy more gold instead of US dollar. Very normal. Reason number one, why is that? It's because of technical analysis. Gold was down. It was about, oversold territory. Then after that, it recovered. Very normal. Once something dropped, became oversold, it just goes up. Once something became overbought, it dropped. Very normal. Drop, up, down, up, down, up, down. Here maybe not so much up because we have resisted at 4,800 level, resisted at 5,200, resisted at say 5,300, 300. So if gold breaks above all these resistance, then we maybe see new highs in 2026. But I think it may take some time because the spike, it was really, really brutal, right? The spike was a lot. It may take some time for gold to break out because of the inflation. Because when there's inflation, if Fed pause the interest rate or even hike the interest rate, it's very expensive to borrow money to buy gold. So people may not buy gold. So that's why the gold price may drop if the interest rate goes up. So which of the reason do you think gonna contribute the most to the gold price increases? Comment down below. And I'm gonna choose the best answer, right? So there are 5 reasons. Reason number 5 is US debt is over US GDP. And reason number 4 is a Fed rate cut. And reason number 3 is World War III. Reason number 2 is central bank gold accumulation. Reason number 1 is a technical oversold territory. So that's why gold could go up. And if you want to learn more about gold investing, stock investing, call option, put option, invest option, and day trading movement and stock, go to Master Risk Stock Option Crypto and go to playlist. You can check out my playlist as well. And I'm gonna give you bonus. One stock option better than gold is MU. I traded MU on April 1st. That time it was on 39.93. So multiply with 100, 3,993. I bought it. 360 strike price May 15, going to expire pretty soon. I bought it. And May 1st, what happened? On May 1st, it became 183, so 18,339. So 4,000 investment became 18,339, more than 315%, right? So it's basically 4 times, no? More than 4 times. Pretty good, 4.5 times. Very good return in 1 month. But I think MU has a rank. It could run more because it's already broke up. It dropped, so that's how I took advantage of it. Then after it broke up, then I think it will keep going up too. But the next time it dropped, then you want to take advantage of it, okay? But if you want to learn more what I trade, what I buy, you can go to Master Risk Stock Option. The link will be in the description comment below, Patreon, and you can have a call with me, discuss your financial goals and what I've been doing. I want to share. I usually share tips in this mentorship call. The link in the description comment below. Share, subscribe. I will see you in the next video. Bye.